It's Wednesday evening, November 11th, and it is time for the weekly swing trading video. Hello, traders. We've had an exciting market so far this week. Man, I can't recall the last time we had a 150-point gap open to start the week. That's exactly what happened Monday. Look at that rally. When I turned on my screen Monday morning, I went, holy cow, what just happened? Well, we had news that Pfizer had completed its phase 3 clinical trial with 90% efficacy for its vaccine. They're fast tracking it, they're producing it. It's supposed to be out in the US sometime around Christmas, I believe. 20 million doses initially. Healthcare providers are going to get the first dose, then it'll be the people that are in the greatest need. But they're talking about having a lot more doses early next year. And it's not just that. Eli Lilly came out with really great news on one of its antibodies for the treatment of people who have coronavirus. It's supposed to almost eliminate hospital stays for low risk patients. We have Moderna coming out with a vaccine similar to the one that Pfizer has. It's in phase 3 clinical trials. They're mass producing it so that they can get it out right away when they get that approval. AstraZeneca, they've been mass producing their vaccine. They should be getting phase 3 clinical trial results and approval as well. So there is light at the end of the tunnel. That's really good news as far as the coronavirus is concerned because it has been weighing down our economy the entire year. Everything has been happening in fits and spurts. And right now, we're in another wave of the coronavirus where it's really starting to accelerate. People are hankering down. They're altering their spending habits. That should start to change by Q1 2021. So right now, we still have a speed bump, a rough patch to get through, if you will. Asset managers are going to be looking forward, so they're going to start putting their money to work right now. What's the alternative? They could go into bonds where those yields are not even keeping pace with inflation, so you're generating negative real returns when you put your money into bonds. So the wise are saying, you know what? I've got to be in equities to generate some kind of return. I'll just wait this out. Coronavirus should start to improve. Economy should get back on track. The election is behind us. Yes, there could be some wrinkles with the election. We'll see what happens. President Trump is contesting it. We'll see if there's any proof that there has been mishandling or fraud involved. There are going to be recounts. But right now, the market's pricing in a Biden win. It's also pricing in a Republican Senate. And that's critical for the market because it wants to retain the Trump tax cuts. We also have another issue that's pending the stimulus bill. When the heck are we going to get this stimulus bill passed? Well, the pressure's going to be on. We know that Republicans and Democrats want that stimulus bill. Small businesses are suffering. They need that lifeline. Hopefully, politicians, now that they've returned back to D.C., are going to get that bill passed. We also know that there is a budget that needs to get passed and a debt ceiling that they're going to hit in December. Well, that's only a few weeks away, so they better get to it right away. And if my gut is correct, they're probably going to try and get a massive bill with both the stimulus bill and the budget and raise the debt ceiling all at the same time. I'm not overly optimistic. We've got England hitting some hard deadlines as well, and there could be a hard exit for England from the EU. Negotiations have not gone well. We'll see what happens. So there lots of items right now that are weighing on the market, but overall, you have to believe that we're finally getting through this whole coronavirus deal. I think that's going to support stocks and we're going to trade accordingly. So that's the fundamental backdrop. I don't see anything that's earth shattering or that's going to spark a massive round of selling. But I also see that stocks are fairly rich on a historical basis because PEs are at 23. What that means is that when the market gets ahead of itself on a day like this, Monday, and everything looks great, and now we've got a vaccine and we're off to the races, not so fast. Profit takers came in and they spanked the market right back down to where it came from. Tuesday's price action was pretty weak. That was follow through on a gap reversal that we saw on Monday. So yesterday we came in and we filled in that gap completely and we found support with the market closing near its high of the day. That was a key bar. Very, very important bar. That was a good bar. That got me bullish. Today, I was hoping that we would be able to get through the halfway point of this long red candle. Didn't quite get there, but the price action was bullish. So now that the breakout has been tested, that's the breakout. It's been tested. The gap has been filled. We're starting to rally above it. This breakout is going to be tested. That level is 358.75 on the SPY. I believe we're going to close above it this week. I believe Friday we should be able to close somewhere above SPY 360. Seasonal strength should start to come back into play. And I think that we're getting poised for not a massive year-end rally, but a nice grind higher without too many surprises and without the rug really getting yanked out from underneath us. We'll see what happens. I think there's some stocks that we can really get into right now, sell some out of the money premium, take advantage of accelerated time premium decay, stay within that 3-week cycle for the most part. I've got a little bit of a longer term play that we're going to try and put on as well. So I've got 5 trades for you this week. So let's take a look at what they are and how I found them. I also wanted to mention that we do have this double bottom low right here. And you can see how that support held, and it's right around that 100-day moving average. I don't see us going back down there. In fact, that 50-day moving average feels safe, and even this SPY 352 level to me looks like a decent support level. So we're going to be keeping an eye on 352 for our purposes. I really don't want to go below that. If we do, then that means that we have a failed breakout. Buyers here on that breakout, and then you get a reversal below it, and that flushes out anybody who was getting long in here. So nothing too concerning, but that's a level that I'm keeping my eye on. Market first, market first, market first. Everything looks good with the market right now. We've been waiting patiently for some clarity, and now that the elections are behind us, we have some clarity at least. So let's take a look at some stocks that I found. I go through all the searches. I'm constantly pounding through these searches during the day looking for day trades. I also run some custom searches. For those of you who are swing traders, Pop Bull, fantastic search list. Go there, you're going to find some great trades. You can look at buy into earnings and you can sell some out of the money bullish put spreads on these stocks that are coming up, but you have to make sure that you've got an expiration date between the earnings date and you want those options to expire before the earnings announcement, that's a good search. Right now, earnings season is climaxed. I love going into this list right here. And this is strong after earnings. We didn't get filled except for one trade last week that we had. I had mentioned on Wednesday evening that we needed to get filled Thursday or Friday. We did get filled on one of them. We'll take a look at that trade. It's doing pretty well right now. But this is the list that you want to look at. Which stocks are holding up really well after posting earnings announcements? AIG was one that caught my eye today. That's a beautiful breakout right there. And you can see how it gapped higher and it's been able to hold that gap. So I would suggest looking at this one. I think the option premiums weren't rich enough for me to have interest in it, but it's still a decent looking stock for those of you who just want to trade stock. UPWK was another nice one. If you're just a stock trader, you don't have to go through the rigors of what I go through looking for these trades. Just buy the stock. I had mentioned this one in my video yesterday that I did and posted to YouTube. I love these long tails under body. Love the fact that the stock was able to hold that gap even during that big market decline on Monday, or that gap reversal. Looked really good to me. Off to the races. So this is a great search to use. Strong after earnings. Heavy buying's a definite favorite. You'll see some of the candidates from today in there. Relative strength 30, fantastic, as well as bull run. So these are all stocks that option Stalker Pro traders have, and a lot of those searches are great for day trades. And then I also went in and started doing some custom searches today. You know that I like using good option liquidity. I've been using earnings date previous because I want to make sure that I'm not tripping over earnings announcements that are coming out. Stock above prior day high, another nice criteria. I used compression out, bullish. That means that it was compressing and now the stock has broken out to the upside from that compression. A lot of stocks in this list, and a lot of them that we're going to be trading are in this list as well. You can also go in and you can click trade signal, bullish across a number of time frames. See what that yields. Today was a very quiet day in the market because it is a banking holiday. Veterans Day, excuse me, by the way. I'd like to thank all the veterans for their service. So the volume today was relatively light. Having this heavy volume today criteria would not be particularly good today because it's going to filter out an awful lot of results. Not a lot of stocks had good volume today, but the ones that did might be worth a real look. And there's one right there that I like, Qualcomm. So keep casting a wide net and then draw that net in by adding more and more filters. You know that I love to use relative strength as one of my criteria. So that's one that you definitely should be marking as well. After going through a combination of different searches, I was able to find some stocks that I really like today. So let's get to it. Let me show you what I like. And I'm going to go into the trade screen here, and we're going to take a look at our staged order entry screen because I have some housekeeping to do first. GLD is the first thing that we need to take care of. Last week, I had mentioned to you to put an offer out there to sell your puts for 50 cents. And you can see the big drop that we had on GLD. This was Monday morning on that huge market spike. When the market spiked higher, gold got trashed. If you weren't filled last week at 50 cents on GLD, you certainly were Monday morning because I know they were trading over $1. We're done with that trade. We're out of it. It's okay. It was a loser for us. We'll get our money back. But you can see here, everything started to conform technically for us. We had this nice wedge formation right in here that was forming. We had that nice breakout that we were going to get long on. We actually bought here the next day when gold pulled back. Didn't realize gold would pull back the next day overnight like that. I was hoping it would get through the 50-day moving average. Exactly the opposite happened. Since then, you can't make heads or tails out of this formation. Look, breaks below the 100-day moving average, then it's above the 100-day moving average. Then it runs above the 50-day moving average, and then it tanks below both of these moving averages. I'm not going to touch gold. It's too random in here. It's not in my wheelhouse anyway. I'm not a commodity trader, so I thought I would try a trade that was setting up well pre-election. I was wrong. So we're going to put that trade behind us. Last week, we did get filled on TWLO. It was the only position that we were able to get filled on, and we sold the November 20th 275 puts, and we bought the 270-250 puts. So let's take a look at that trade, TWLO. Also want to talk a little bit about what happened on Monday. I'm sorry my data is updating right now, so you can see I've got some dupe data here, and I'll try and back that last candle out right here. So we got filled on this. We were kind of leaning on this 100-day moving average right here, and you can see how the stock pulled back. Tech stocks this week have sold off hard. I'll put the QQQ up, and you can see that. Monday, when we had that big market rally, tech stocks were already selling off. They did not participate in the rally like cyclical stocks did, consumer discretionary, and that's because there was a massive rotation out of tech stocks because they have been leading the market higher. So there was profit taking in that sector, and the market was rotating into some of the other sectors. Hotels, restaurants, airlines were all getting lots of buyers. And so tech stocks sold off hard. They did find some support here. This is the QQQ. It found support at the 50-day moving average, and it was able to rebound a little bit. So I'm not worried about the macro environment for tech stocks. I think it's still very, very sound. In fact, this pullback is probably a buying opportunity from my perspective. But TWLO in the process got hammered and it did drop below our strike price, but I'm not overly worried about it. You can see how it found nice support here. And look, the stock closed at 279 today, above that 50-day moving average, and our 275 puts are out of the money. We also have a nice bullish hammer right here off of that 100-day moving average. I think we're going to be in fine shape on this stock. So if action is required, I will send you an email. But at this point right now, I'm expecting the stock to move higher, and I believe that we're going to have nice distance and a nice cushion by the close Friday. Who knows? The stock could even get above 290 for us. Then we'll have plenty of room with only 1 week left in that position. I like it. I still think it's going to be a good trade for us. So let's start taking a look at what we've got for this week. I'm going to put up the staged order entry screen, and you can see Qualcomm, I like it. SPCE, I like it. Hilton Hotels, like that. Like Apple, like PINS. So we're going to go take a look at those charts, and we're going to take a look at the options here. And since Qualcomm's first on the list, we're going to go right to that one. And we're going to go to the Qualcomm November 27th expiration date. And we're going to go down to the 139 puts. And I'll show you why. First of all, it's one standard deviation away. And we're going to click on the 138 puts. You know that because I've got $1 between the strike prices, I'm going to be looking to get a 20-cent credit for this. And so this is already configured for you in the staged order entry screen. Now let's take a look at the stock and see why I like it. QCOM. Here you can see the earnings announcement right there after the close. Beautiful breakout above that 132 level. And the stock is off to the races. We get this big bar on Monday. That was the gap reversal for the market. Stock pulled back a little bit yesterday, but bam, right back at it today. So this bar right here gives us something to lean on, and that 139 strike price is just below it here. So I believe that this gap is going to hold, and I believe that Qualcomm is going to continue to grind higher, especially if the market is flat. This stock should continue to grind higher. If we get the little market rally that I'm looking for, that I'm expecting, this stock is going to continue to move higher, and we'll distance ourselves from that strike price in the gap. So again, to recap this trade on Qualcomm, we are going to be selling the Qualcomm November 27th 139 puts. We're going to be buying the 138 puts, and we're going to be doing that for a 20-cent credit, and it is good till canceled. We are going to try and get this trade done Thursday and Friday. If we are not filled by the close Friday, we are going to cancel that order. So that's the first trade that we're going to try and do. Next on the list is SPCE. And here you can see earnings after the close right here. The A right there. Major moving averages, all converging at one price point. I like that. When I see that, I like it because it tells me there should be really good support there. So let's take a look at how the options set up for us. I also like the relative strength here. If you take a look at what the stock did Monday, it moved a little bit higher, but it still closed up for the day, even though the market had a nasty reversal. So good relative strength here as well. And I'll put up that 1 OSI indicator so that you can see that. Orange line above 0 equals relative strength. So let's take a look at SPCE and see what we might be able to do there. And we're going to go out to the November 27th expiration date. And this is an easy one. This one I'm just going to sell a naked put on. Well, why am I selling a naked put? First of all, I want to sell a naked put right there at the $19 strike price. And the $19 strike price is right in the thick of all of this support right here. Yes, I would like to buy this stock at $19. Actually, because I'm going to be doing this for a 45-cent credit, I'm going to be selling that $19 put for a 45-cent credit. I'm actually going to be long stock at $18.55 if I'm assigned. Well, look at the 200-day moving average. It is the lowest of the three, and you can see that it's at 1876. So I'm going to be able to buy the stock below the 200-day moving average. Well, how does the return work out on this? I have to put up 20% of the strike price to do this. This is the exchange minimum margin requirement. So roughly on this trade, I'm going to have to put up $3.80. Well, if I were able to sell these puts for 38 cents, that would be a 10% return on the margin that I have to put up in 2 weeks. That's a really good return. And if I start monkeying around with other options and buying some other out of the money options on this stock, then I'm going to ruin that return because I'm going to take in less than the 25% return that I'm looking for. And in this case, I just want to be naked short the put. I'm willing to take assignment on the stock. It's a very, very easy trade. If we do get assigned, we're going to be long the stock at $18.55, and then we'll turn right around and we'll sell an out of the money call and hope that we get assigned when the stock rebounds. Love the support level right here. Really good. Got a lot of horizontal support right in there. If we do get assigned, really like owning the stock down in here. So that's the second trade. We're going to sell the SPCE November 27, $19 put. We're going to take in 45 cents for that. And that's where the options were bid roughly yesterday with a 10-cent bid-ask spread roughly. I think we're going to get filled on this tomorrow morning. So that's trade number 2. Move this off screen so we could take a look at the next one. HLT. HLT, we have this gorgeous horizontal breakout. Resistance 1, 2, 3, 4. Tails above body. Even after the earnings announcement, the stock was able to hold its own, which is good. Hilton Hotels, obviously impacted by the coronavirus. I believe that with each passing week, we're going to be closer and closer to having that vaccine, and people are going to start considering their longer term vacation plans, their longer term travel plans, and I think Hilton Hotels will be in decent shape. There probably will be some bailout money also for the travel industry. So I like Hilton. I think that it had a nice gap up. It's been able to hold that gap so far. And we're going to go all the way down to this horizontal resistance level, which is at $95. Now we're going to have to go out a little bit further in time on this one than I'm used to. But it's okay. The stock doesn't move that much. It's not that volatile. So let's take a look at this trade on HLT. And we're going to go out to December. So this is a 6-week long trade. And we're going to go down to the 95 puts. And we're going to click on those. And we're click on the 92.50s, $2.50 between the strike prices. So you know that we want to have a 50-cent credit for this. And you can see that that spread is 35 cents bid, offered at 95 cents. I believe that we have a really good chance of filling on this trade tomorrow. Now, if everybody goes out and pounds 50 cents, we're probably not all going to get filled higher, but I think, if it were just me trading and nobody else, and I kept this trade to myself, I'd probably be trying to get in for 60 cents, and I think I'd have a pretty good shot at it. But we're going to try and get in at 50 cents. The options are not super, super liquid, so it may be a little bit more difficult for us to get in. 50 cents is the credit we're going to take. I'm happy to make a 25% return on that, and I believe that this horizontal was resistance. Now it's support. I believe that this $95 horizontal support level is going to hold. Recap one more time. December 18th, we're selling the 95 put, buying the 92.50, and we're doing that for a 50-cent credit. So there is trade number 3. We're going to get filled on a couple of these at least, probably even maybe 3 or 4. I hope we get filled on 3 or 4 of them. We've been trying for weeks to get filled on a lot of these, and it's been tough. We had a whole basket of positions on about 4 weeks ago. We had 7 trades on. We reeled them all in. We were able to make a little bit of money on them. We were able to scratch the rest. All of them probably would have expired worthless, but we played it safe. We waited for the election results, and that's okay too. So better to be safe than sorry. So the next trade that we're going to take a look at is Apple. Now we're going to get a little aggressive on this one. I like Apple and I like what I saw today. I traded Apple, did well on it. You can see how Apple has this downward sloping trend line right here. You can see that visually. There's another downward sloping trend line right in here that is a little bit tighter, conforms a little bit better because it has more points touching it on the way down. And then we get a little breakout here. Then the stock rallies above the 50-day moving average. Now here's the tell for me. You can see how the 1 OSI indicator is just about at 0, just about ready to cross. Here's what I liked. So you had this gap reversal on Monday. So tech stocks got hammered badly. And actually, let's do that. Well, I don't need to. You can see it visually. Tech stocks got hammered badly. Apple finds support at the 50-day moving average. Yesterday, market tests the low from Friday, or it tests the close from Friday. Stock right on that 50-day moving average. Today, Apple was up, and it engulfed almost all of this bearish reversal right in here. So this is strong relative to all of the other tech stocks. I really like the price action today. And if I go in and take a look at, let's do a 15-minute chart, and we're not going to do an SPY overlay. Here's how you do a QQQ overlay. I type in Apple, and right here where it says overlay, type in QQQ. And then we'll be able to gauge what Apple did relative to the NASDAQ 100. Well, you can see how it ran up Monday, just like the rest did, but then the QQQ kept coming down, but Apple was able to find support. You can see here how QQQ was down, down, down. Apple holding up very well right here. Here you can see how Apple was up today, and it held all of those gains. So on a relative basis, Apple has held up well relative to the QQQ, and I like that. So I think this stock is going to be a nice play for us. I like leaning on that 50-day moving average right there. And if I want to take out that overlay, I just type in Apple, zero this out, and then bring the chart back up. So I think that Apple's going to hold this 50-day moving average. Apple doesn't typically carry a lot of premium. I love the fact that this downward sloping trend line has been breached to the upside. So what we're going to do is we're going to sell a fairly near-term Apple bullish put spread. And we are going to bring up that option chain. And we are going to go to the November 27th expiration date. And we are going to sell the 115 puts, and we're going to buy the 114 puts. And we know that because there's a dollar between the strike prices, we are going to be trying to get a 20-cent credit for that. So let's recap. On Apple, we're going to be selling the November 27th 115 puts. We're going to be buying the 114s, and we're going to be doing this for a 20-cent credit. Now, you might be saying, well, gosh, Pete, I don't know. Relative to some of the other trades that we've done, I'm a little bit nervous about this one because we're so close to the money. I haven't bought any calls in a really long time. I haven't had the market conditions to buy calls or to want to buy calls. So this is an aggressive trade. Yes, we're closer to the money, but I really like the price action. I plan on day trading Apple from the long side tomorrow. I liked what I saw today. It closed very, very well today. Lots of relative strength during the day when the market was down. Apple was moving higher. And now I'll put the SPY overlay so you can see SPY was down. Look at Apple holding right near its high of the day. There are buyers in this stock. So I plan on day trading Apple from the long side tomorrow. I really like it. I'm not buying calls on it because I'm not that bullish on the market. But this is a way for us to get pretty aggressive and to be in a good stock that hasn't been hammered. It's in the tech sector. If tech stocks start to recover a little bit, which I think they will, Apple's going to outperform. It's going to do very well. So that's the fourth trade that I like. Now let's get on to the fifth and final trade, and that is in PINS. Now here's what I like about PINS. First of all, it's had a really nice uptrend. You can see the earnings right here after the close. Look at that gigantic spike up the next day. So obviously investors liked it, but it got ahead of itself. You can see how the stock pulled back, then it rallied. Usually when you get a check like this, where the stock comes into the gap and then it reverses sharply, normally you're going to get continuation and the stock is going to continue to move higher. It didn't in this case, which is a little bit surprising, but if you look at what this day was, that was the day that tech stocks got annihilated because of the coronavirus news. So there was that huge rotation out of tech stocks and into the cyclicals, into the laggards. And so PINS dropped again. And then yesterday, when we were challenging that high from Friday to fill in the gap, it got hammered pretty hard as well. But I love this bullish hammer. And I love the fact that it was able to close near its high of the day. And then today, boom, the buyers are back. So for this trade, we are going to lean on that level right there, which is approximately $54. So I'm going to bring up the option chain, and we're going to go into the November 27th expiration cycle, and we're going to go down to the $54 puts, and then we're going to click on the 53.50s. And since there's only 50 cents between the strike prices, we are going to do this for a 10-cent credit. Good till cancel. And you can see that that spread is negative 9 cents bid offered at 25 cents. So we'll probably be in the middle of that bid-ask spread. I think we've got a chance of getting it done for 10 cents. If we can, it's going to be a nice trade that'll generate a 25% return in 2 weeks and 2 days. So really decent. I like this formation right here. Feel really good about this trade. And I love the fact that it was able to bounce. PINS is probably another stock I'm going to be looking to day trade tomorrow. We can take a look at the strength today. Bring up that 5-minute chart, and we could do the SPY overlay, and you can see how the market sold off late in the day, but the stock held its gains and moved higher. Folks, this is our edge. This is the edge that we work every single day. It doesn't matter if we're swing trading. It doesn't matter if we're day trading. We're looking for relative strength. And when we spot it, we know we've got an opportunity. I can show you a trade that I did today. Roku set up perfectly. I went through the relative strength 30 search. I spotted it immediately. I could see market down, 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 stock compressing. I bought Roku right in here. I was trying to wait and wait and wait for the market to find support. Finally, I saw the stock ticking higher. I'm like, I got to get in. I ended up making $1.50 on that trade. So easy. That is our trading edge. Now, we also have an edge in our ability to evaluate market conditions and to tell when we're supposed to be leveraged up, when we should allocate more, when we should be on the sidelines. So yes, market first, market first, market first. But once we have our market bearings, our focus shifts to finding the best stocks. And the best stocks have heavy volume, They have breakouts and they have relative strength. And when we sell those bullish put spreads below technical support levels, and when we take advantage of accelerated time premium decay, we have a recipe for success. That's why 2020 has been such a good year for us. I'm trying to finish us on a strong note here. I think that these trades all set up really well. So please get your orders in before the market open. Try and get them executed. If we are not filled on our trades by the close of Friday, the orders are canceled. Even the Hilton order that we're going out into December for. Well, why does Hilton matter? It's going to be a 6-week long trade because I want to get filled on that thing tomorrow or Friday. I feel we should be filled on it tomorrow, right on the opening bell. If the stock opens where it closed today, we should be filled on that spread. And if we aren't, it just means the market makers are playing games with us and they're not going to fill us on it. That's why I'm putting Hilton into that basket as well. But the other 4 trades besides Hilton, same deal. Not filled by Friday close. Cancel the orders. We'll swing again next week. We'll see if we can get another trade off next week or even on Sunday nights. If I see something I like, I'm going to post a video and we'll try and enter trades at that time. So I'm pretty bullish here. I think the market's going to continue to move higher tomorrow. I think that by the close of business on Friday, we're flirting with SPY 360. So let's try and get some positions on and make some money. Thanks again for watching. If you're watching this video on YouTube, I publish it Wednesday night for my members. I release it to the public on Saturday for YouTube subscribers. There's lots of educational content in here, so some of the trades might still be in range and you can still get in them, but more importantly, I hope that you're learning from the lessons and from the methodology that we use. Thank you. Good night. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.